Hello, my name is David Hodgson, Executive Vice President, Portfolio Management at Chesswood, and I'm joined today by Chris Wallbank, Executive Vice President and a member of our Portfolio Management team. We wanted to take a few moments to introduce you to the Chesswood Canadian Asset-Backed Credit Fund and highlight why it's a good solution for those looking to add private credit exposure to their asset mix. Chris, can you provide an overview of the fund?
Yes, thank you, David. The Canadian Asset-Backed Credit Fund is designed to provide risk-adjusted returns with significant interest income, a focus on capital preservation, and regular distributions to unitholders. The fund targets annual returns of 8 to 10% with low correlation to public markets by investing in a portfolio of short-duration asset-backed leases and loans. These are primarily underwritten and serviced by Chesswood's Canadian subsidiaries in the commercial equipment, automotive, and home improvement sectors.
Great. Can you maybe touch on some of the attributes that you believe differentiates our private credit offering and how we administer and manage the fund?
Sure. Our Canadian operations evaluate over 100 million of applications for financing each month. There are over 180 team members focused on credit adjudication, portfolio administration, and collections. Our credit adjudication team leverages a proprietary credit scorecard to guide consistent analysis and decision-making, allowing them to effectively price for risk. Our servicing and collections teams have experience managing these receivables over several economic cycles. The Chesswood Canadian Asset-Backed Credit Fund is anchored by a portfolio of equipment finance, lease, and loans to prime commercial borrowers and complemented with consumer home improvement and automotive loans. These receivables make monthly payments and carry little to no residual value risk. More importantly, they are secured by equipment that is essential to the day-to-day operations of each borrower. Furthermore, these leases and loans are governed by standardized documentation and enforceable contracts that provide us with recourse in the event of default. With an average size of under $50,000, these credits are diversified across geographies, industries, equipment types, origination sources, and obligors. All contracts originated by Chesswood subsidiaries are initially underwritten by the appropriate credit teams. These contracts are then independently evaluated by the portfolio manager for their suitability in the fund.
There are a number of direct lending funds in the marketplace, and liquidity has been a drawback to more widespread adoption. Chris, can you talk a little bit about the fund's liquidity and payback cadence?
Yes, for our equipment leases, the average term is approximately 48 months, and payments are fully amortizing, meaning each payment includes both principal repayment and interest. This not only provides liquidity for the fund investors of approximately 5% of net asset value each quarter, but also reduces refinancing risk. Specifically, the principal return in each payment is a natural credit enhancement. This reduces the investor's capital at risk as the loan is paid back each month. In contrast, traditional corporate bonds make semi-annual interest payments, and principal is repaid in full at maturity. Furthermore, the monthly payment schedule allows the servicing team to have immediate feedback on the status of each borrower. If a payment is missed, it can be determined in short order whether the collections team needs to begin the standardized enforcement and recovery process. This core group of prime equipment receivables is complemented by higher yielding non-prime automotive loans and working capital loans to borrowers with a long-standing history of consistent payments.
So what's the current structure of the fund, and are there any plans for an RSP eligible version of this fund?
We launched the fund earlier this year targeting high net worth investors with a limited partnership structure. Waypoint Investment Partners, our asset management company, is the manager of the fund and oversees the fund's operations. We expect to launch a mutual fund version with eligibility for RRSPs and other tax-free accounts very soon. Stay tuned.